Saw the book clear out pretty much 50-point reaction to CPI yesterday. Uh, I think the best approach, like you said, JD, let the dust settle, let that number come out, and then maybe we get some opportunities from there. They can be a quick trade, uh, but I don't want to be the soccer goalie during penalty kicks and trying to guess where this market is going to go because it
Yeah,
could go
right.
both ways, go both ways, stop you out, and then
Mhm.
pick a direction. Direction.
All right. Here it comes.
Spectral in the chat saying YM going to be a good trade today. Gorillionaire flat like that. Flat is smart. Janine looking at the currencies, the euro and
It's not a
gold
bad call. Not a bad call.
currencies.
Yeah, watch the yen or the euro versus the dollar.
Yeah.
Get a good idea of how the dollar reacts to this.
Right. You got
Less than
about
1 minute.
50 seconds to that number. Remember, if you have a position on, make sure it's a position that you want on. Hit that flatten all button a couple of times. I saw Doom, who's coming up on Fast Markets, post on X, and he said he hits flatten all at least 4 times before he closes his platform. I don't think I press a button more on my platform than that flatten all
Mhm.
button. Uh,
Mhm.
one of the worst feelings is
Flatten
coming
all,
back to your
cancel
platform.
all.
Yep,
Cancel
one
all.
of the
Flatten
Yeah,
worst
all,
that's
feelings
a
is
cancel
good
all.
one too.
coming back to your platform and realizing that you're in a trade that you didn't want to be in. I don't know about you guys, but it's usually a red one. Those mistakes don't work out in my favor too much. So making sure don't have anything on before we go into this. 10 seconds here.
All right. Domes are thin. NASDAQ dome is non-existent.
There
S&P
goes
dome.
gold.
Big
Spike in
spike there in the
gold.
Nasdaq.
Knee-jerk reaction to the upside in gold right now. Decent size move. Last
Right.
trade 33.44 half.
Do we have
Our equity's
the
looking.
number?
All right. Numbers are out.
Nasdaq spike to the upside. Numbers are out. What do we got, Hogue?
Here we go. Yeah.
All right. So
And then a
core
little hot.
CPI year over year for June was 2.8%. They were looking for 3%, came out 2.9%, a little lower than expected. Core CPI month over month for June, it was 0.1%. They were looking for 0.3%. That came out 0.2%. Higher, but a little bit lower than expected. CPI year over year for June was 2.4%. They were looking for 2.6%. That came out just a little bit higher at 2.7%. And the CPI month over month for June is, well, they were looking for 0.1%. They were it was 0.1%. They were looking for 0.3%. That came out at 0.3%. So the core CPIs a little bit lower than expected, and not bad numbers for the overall CPI. Just a little bit of an uptick in that year over year June
PPI, Hogue.
PPI. Are you
PPI.
looking at CPI or PPI?
Oh,
Okay. Just
geez,
checking.
man, what am I?
All good,
I
Hogue.
had this on today. All right, now let's do this. Oh my goodness, lower than
Okay.
expected. So core PPI month over month in June, they were looking for 2.2%. That came out flat. There was an increase, however, there was a revision in the previous month from 0.1% to 0.4%. So a little bit of an uptick in the revision. Core PPI for June, they were looking for 2.7. That came out 2.6, a little bit lower than expected, but again, another revision in the previous month from 3% to 3.2%. So all of these numbers were revised higher from last month, but came out lower than expected for this month. PPI month over month for June, they were looking for 0.2%. They came out at 0%. But again, another revision in the previous from 1.1% to 0.3%, and another revision for PPI year over year in June, revised up just 0.1% from 2.6% to 2.7. They were looking for 2.5%. That came out at 2.3%. So overall, these numbers are not hot. These numbers are good.
Mhm.
You ask me,
Nice.
even with those revisions, and there's always those revisions. If there is something that's going to take the wind out of the sails to the upside, it might be those revisions.
for sure. That's actually what a lot of people pay more. They pay closer attention to the revisions than they do the actual
Good
new
numbers,
reports coming out.
inflation coming down. We see a spike in the equities here. Nasdaq again, another
Mhm.
50-point reaction to that number. Uh, Trading 23.70 right now, 23.67. What did gold do there, JD? Did we sell off in gold again?
We got an initial knee-jerk reaction to the upside. I don't want to speculate if we were in this opening range trade whether or not we would have gotten stopped out. We made a new high by just about 4 ticks on that spike higher. We're coming back up to the highs of the opening range again right now. The signal did come in to the short side. Hard to say if we'd still be in this trade if we took it. It looks like we're going to get another test of regular trading hours highs right now. All right.
That was a
Safe
good
to
note
say
take.
if we were, yeah, good note take. Safe to say if we were in that trade to the short side, we would be out right now. And now it looks like we're megaphoning. Looking at a 1 minute
Yeah.
chart, but that is textbook megaphone pattern in gold right now. See what the breakout looks like. If it does break out, it's a tough pattern to trade. Pretty volatile right now. Big swings in both directions.
Same in the equities here. The Nasdaq, 10 points off of that price I just called. We're just trading 70s down at 55s. A lot of volatility. Books are still pretty thin. Still about a 2 to 3 tick spread. So if you're trading this, if you have a setup, go ahead and trade it. Manage your risk. But that number's out of the way, so we can get going with the rest of the day. Uh,
Let's
JD,
do it.
any other? What do you got, JD? Any other news we got
Yeah,
before we get into
got
charts?
plenty of stuff to talk about.
Let's do it.
Trump doubling down on tariffs once again, going after Indonesia this time. 19% tariffs on Indonesia, and they don't seem to mind either. 19% tariffs on goods from Indonesia under a new agreement with the Southeast Asia country. He announced this pack. Not a very huge trade partner with the U.S., relatively minor, but he's pushing for everything he can get out of every country he can find. So 19% tariffs going out to Indonesia very, very soon. We've got more news coming up in just a minute, but let's get into these charts. I know we're getting a little short on time already. Where did the time go? We're going to look at that opening range trade and crude oil at the top of the hour. Until then, for Hoagland, Coach Jay.
Right. Well, Jay, do you want to start
Starting
with
wizard.
gold again?
Yeah,
Because
let's start with gold, Hogue, and then we will go from there. What are we looking at in gold?
so, yeah, we see patient. We see balance. We see need for patience. Price is very centrally located inside last week's range and inside the weekly kickoff high and low. Still a very tradable market. I think that there's really been some decent opportunities in short time frame in this market. Yesterday on this pullback, we added day before yesterday, Monday, we added open interest to the short side. Yesterday, we saw some long liquidation in negative open interest. We lost about approximately 3,300 in open interest, which brought price right back to the central area of the current range. Even though this market is range bound, it is still providing some really, really good opportunities. We're gonna take a look on the 30-minute chart here of where I think those opportunities lie today. But Jay, what do you think about what do you say about gold today? At least on the daily chart.
So on the daily, we've been talking about that 20 and 50 moving average potential cross. They're both trending lower now. They haven't crossed yet. The 20 is at 33, 44, 60. The 50 is at 33, 43, 30. But both trending lower. Again, still looking for that cross. But yeah, a higher time frame. This market is in balance, and it has been in balance for going on 90 days.
Mm-hmm.
No direction, but like you said, Hogue, a ton of opportunity. We've seen some great trades in this range where the daily ATR has come down since April, but it's still higher than it was pretty much all last year. So a ton of opportunity in gold.
Looks like that 20 is trying to sneak up on that 50.
Yep. Sneak attack. And then just cross cross below it. Uh,
All right, let's take a look at the 30-minute chart. So yesterday, we finally closed the gap, right? The market opened, it looked higher. We finally came down, closed the gap, and we traded almost to the tick to a naked point of control from back here on the 10th of July. That naked point of control came in at 33.2750. That was a visual target. And it's amazing how often this happens where the market will find direction and find a naked point of control to just a target and see if there's anything left to do there. Obviously, that happened yesterday. The market recovered a little bit off of that. However, it did settle back inside the range. The gap is now finished in regular trading hours, of course. Now, what about overnight inventory? Market opened here. We are trading here. We are holding a little bit of long overnight inventory, but we are in the range and in value from yesterday. Now, yesterday was a day that had two distributions of time and volume. So what I want to point out here is sometimes you'll hear me talk about potential for repair, and nothing happens exactly the same way twice. However, when we look at the profile, we see an accumulation of time and volume here, low volume, low time here, and an accumulation of time and volume here, if you'll pardon my drawing skills. We're opening between the two distributions of time and volume. That usually tells me that the market is in a bit of a state of repair, that we're going to see if there's any business left to do in this low volume area. We're probably going to test to an assumed point of control in the upper distribution and an assumed point of control in the lower distribution. If I had to, I would say quite possibly, and just eyeballing, okay, the point of control in the upper distribution is obvious. It's probably this volume point of control. We're looking at around 33.55 approximately. The lower distribution, if we're looking for a point of control, we might be looking at an area around this level, or right around settlement, just below 33.58, 33.38.
Yep.
And that would repair a move to the popular to the popular prices in this lower distribution and this upper distribution. Market is going to go seek comfort levels. So I'm going to stay patient today. I'm going to see if we get an opportunity up near this 33.55 assumed point of control in the upper distribution. Maybe we get a look down to the assumed point of control in this lower distribution, 33, 35, 36 area, and see if there's any basing that occurs there for a move back to the other direction. It wouldn't surprise me, and of course, this is not financial advice, and nothing ever happens exactly the same way twice. It wouldn't surprise me that if there's no new changes, no major news that comes out or tweets that come out, that it wouldn't surprise me if this market were to trade to both of these levels at some point today. So I'm looking for a range bound day, unless, of course, something changes. Jay?
I am with you on that 100%, Hogue. I'm marking up my chart here, and pretty much every level that you just said, I agree with. There's this 30-minute candle that was 10 a.m. Central Time yesterday. The range of that candle at the low is 33.39.40. The high of the candle is 33.57.80. And we can see we're kind of holding the lower extreme of that candle right now. We tested up into 50% of it and rejected. That's right around 33.48.80. So what I'd be looking at is, can we trade to the upper extreme of that candle? We do have the 200 moving average on the 30-minute chart, which is at 33.52. So if I do get long, I'm looking at this area as a position management spot. But this market is in balance, and I think we are at the lower extreme of that balance. The question is, if you do take a long here, where do you limit your risk? Is it below that overnight low, or maybe just waiting for a test of that? But we got the news out of the way. There's some more potential catalysts later on in the week as far as planned headlines go. I'm looking at a balanced market and maybe looking for opportunities to buy this. Again, anything we say is not for trading advice, just
Right.
our ideas. But yeah, that's what I'm saying
Mhm.
there, Hope.
Yeah, I mean that's what we're doing here, folks. Is all about context and the way we're seeing markets and looking for possible reference levels and opportunities for us. Rich in bed. I saw your question earlier about repair. That was a pretty good explanation of what repair is. And no, I don't have any expectation for either side to be visited first, either the upper
Order
distribution or the
filled.
lower distribution. All right, that's what we've got for gold. We're going to move on to the S&Ps, but JD, you've got some news for us.
Yeah, for sure. There was a couple topics we covered yesterday here during the opening call. First, we talked about
Order
shipping ports in
filled.
Los Angeles having the biggest uptick in productivity or shipping volume on record, up 8% year over year, or month over month, and up over 30% in volume year over year. We also had that CPI data coming in pretty much in line with economists' expectations. And then Dakota came on and talked about how importers, exporters are trying to get ahead of these tariffs by shipping things out early, but it takes so long for it to come via a shipping container uh, over the seas. But I found this clip, and I think it goes into a little more detail about what we were talking about. So if there are any questions about what we were saying yesterday, we're going to roll this clip, and maybe they'll answer it. This reporter, Mako Yoshida,
Rising
gives a
0.3%
nice breakdown. Oh, go ahead. Volume up.
That's according to new data from the Bureau of Labor Statistics.
The best you can say about today is there was no bad news.
Tuesday's data was expected by most economists who have been anticipating the price effects of President Donald Trump's on-again, off-again tariff policies to begin showing some real-world effects.
The first serious set of tariffs went into effect in April, but they didn't affect goods that were already on a boat. So it takes a boat about a month to get from Europe or China to the US. It then might take another month to get through customs. That takes us through to June.
Reflected in the data, price hikes in a number of categories with goods from China, which are already exposed to higher tariffs, including computers and electronics, textiles, appliances, and toys. The cost of gas and food also on the rise, but due to their volatility, aren't predictors of the larger economic picture. Still, Tuesday's report comes as the Federal Reserve faces increasing pressure from the White House to lower interest rates, but Wolfers says an increase in prices due to tariffs would make the move unlikely.
When the Fed gets worried that the cost of living is rising, it tends to raise interest rates. So if what you wanted was lower interest rates, you would try and keep pressure off the Fed.
There you have it. A little more of a concise breakdown of what we were talking about yesterday. Hope that cleared up any confusion. But get back into those charts, Mr. Hoagland.
All right, thank you, JD. All right, even the S&Ps. I mean, the daily chart, obviously, we are range bound. Jay, you remember yesterday, you and I were both in alignment that if we were going to continue this move to the upside, we were going to need some substantial new buying coming into this market. And guess what? They didn't show up. So now the market is kind of coming back into it isn't back in range and back in a rotational market state. In a longer time frame, I can't put an auction grade because this is a two-sided trade. This is a two-sided auction, and we are just kind of rotating in between. Now, we did see some pretty substantial increasing in open interest, approximately 11,500. New shorts actually came into the market. We didn't see the new buying come in. We saw some new selling coming in. Is that longer time frame, shorter time frame? To me, the way the market acted yesterday and the price action yesterday was probably some shorter time frame traders. We had some very deep negative delta, approximately 30,000 contracts traded more on the bid than the offer yesterday, which would indicate aggressive shorter time frame, weaker hands sellers, speculators. Those are the ones that I think that were shorting into this market yesterday. We do have a little bit of an excess high, and we did put in the all-time high yesterday prior to the regular trading hour session. Jay, what do you think about what we're talking about here with the possible accumulation of shorter time frame shorts up in this area?
Yeah, it's interesting, Hogue, because we made an all-time high yesterday, and we know that there are always going to be the contrarians that say, you know what, this market's up too much, I want to short it. they're not getting a whole lot for it. They got maybe if they were day trading it yesterday, they did, but this market is holding up pretty well. What I'm looking at on the daily here, I have the monthly range kind of marked out and a monthly VWAP. This pink line is VWAP for the month. It's sitting right at 50% of the range for the month right now, which is just telling us balance, range bound market. Right now, we're kind of in the middle of it. Um, I'm curious to kind of see what type of trading day we have today. Um, but this market is holding up pretty well, right? So if shorts are coming in and there are new shorts coming in and don't get price to move lower, I think I said it on the air the other day, but bad sellers become great buyers when they have to,
Uh-huh.
and this is a market that is grinding to the upside for months now. So I'm curious to see how if they get any traction or do they just have to let those positions go.
that that's a great statement there, Jay. Bad sellers become great buyers, and we've been watching, or at least I've been watching the S&Ps eat shorts for 40 years. Unless there's some sort of bad news, these markets do tend to just grind shorts to a pulp all the way up. Again, there are some uncertainties out there. These markets are very resilient, and I think that they have been doing a very good job of holding up with all the uncertainties out there. Let's take a look at the 30. All right. So the all-time high in the S&Ps was actually in the extended trading hour session, just barely. Does that matter? Is that close enough for rock and roll? Is it close enough for horseshoes? Who knows? But yesterday, now this is something we talk about with the opening range trade quite a bit. Yesterday, the market had overnight inventory to the long side. We opened, we couldn't take out the all-time high. We left the opening range at the dead ass high of the session, and we closed the day at the low of the session. This is one of the higher probability opportunities because we've opened outside of range and out of balance from the previous day. Would have been a pretty good take of the opening range in the S&Ps and the NASDAQ. However, we don't know. Somebody was asking yesterday, how do you know when it's going to be a good day to take an opening range trade? You don't know until you know. And yesterday, we didn't know, coming in if we weren't going to see those buyers that we were looking for above last week's high come in and push this thing higher. You don't know. So you take your chance, and it would have been a relatively small risk for us to take that trade. But but one thing about the equities is they've been very stingy when it comes to opening range trades. Anyways, overnight inventory today. Well, it certainly has seen some change here. Where is our 5 o'clock open? Right about there. Starting to look a little bit long. We were possibly going to be opening with a gap. No, that's now out. We also have the idea that the market really kind of traded below the range. It is now back in range. We did have a late spike to the downside yesterday. The base of that late spike, 62.91 quarter, opening outright below a spike to the downside indicates probable acceptance of higher pricing. Opening inside the late spike is a secondary, but still a higher probability of lower pricing. The 730 numbers, the PPI numbers have changed all of that. Now it looks like the regular trading hours is going to open above the base of the late spike, which indicates probable acceptance of higher pricing or balancing pricing. So that PPI number so far is being viewed as a positive by the traders that are currently in the marketplace. It might be one of those days again to buy BTFD, buy the dip. Jay, what are your thoughts?
So I'm looking at, and like you said, Hogue, that PPI number looks positive so far. On a shorter time frame, on the 30, we have the 200 moving average, which is pretty much right at 6,300s, where we are right now. I'm looking at a 3-minute chart, just because I want to see that, that range of that PPI candle. 62.85 at the lows, 62.96 at the highs. What I'm looking for right now, similar to yesterday, we have the number out. How does the market respond to this number? Price wise, we're leaving that range. I'm looking to see whether or not this volume leaves, because then that means that these buyers are stepping up. They like the data that we got there, and continuing to buy it. Upside, I would be looking at the upper extreme of the range, right? Upper extreme of that range for the targets, starting with 63.20, and then maybe up to that all time high 63.43. But yeah,
Mhm.
that PPI range is going to be important. I do want to see volume leave that range. We didn't see it yesterday, right? Yesterday on that CPI number, we saw price in the Nasdaq, not in the S&P. The S&P, that CPI number was the all-time high. In the Nasdaq, we saw it leave that range. Volume didn't, and then we saw the sell-off. So
Uh-huh.
I'm just going to be watching the market's reaction around that range. Right. I know we
Okay,
got a
awesome.
couple of minutes here before crude oil opens up. We'll be looking at that crude oil opening range. JD, any news we have on crude before we take a look at this trade?
We sure do, guys. We're going to talk about crude oil inventories for a second. Remember last week we saw that huge miss. There was a giant spike in inventories, and yesterday the API, the American Petroleum Institute, came out with an even bigger inventory number. Another huge miss, off by miles and miles and miles. The estimate was for a $2 million drawdown, and it came out with an increase of 19.1 million barrels. So a miss
How
by
is this possible?
20 million barrel miss in inventories. We saw last week. Well, we're going to get the EIA petroleum status report out at 9:30 a.m. Central Time to confirm whether these estimates by the API are correct or not. But last week they turned out to be correct. We saw a huge spike in inventories. We're expecting a little pullback in crude oil. We're actually short from the opening range trade. I thought we had the trade of the month on, but even after a huge inventory number, crude oil just turned around and rallied right in our faces and stopped us out of that trade. But today, this is the inventory is number expected to be almost triple what it was last week. So another huge spike in inventories. We'll see how crude oil reacts. Not much movement in it right now, but we're going to be looking at that opening range trade, like Jay said, in just about 5 minutes. So run through some charts real quick, and then we'll get in this trade.
Yeah.
Good.
Yeah. So, JD, I think this is going to be a pretty important opening in crude oil. We know we have the EIA at 9:30, but we're still in rollover. Tomorrow we will be trading the September contract, and the longer time frame wants to keep things relatively quiet so that they can get a cheap roll. But I don't know if they're going to be able to do that tomorrow or do that today. Uh, look at the lows here. We've got the weekly kickoff low 65.70. We've got the 200 session moving average on the daily chart, the simple, at 65.50. We've got last week's low at 65.40. There's a lot of confluence down here in this area, and that's what makes me think that something is likely to happen. But of course, we have to remember it is in rollover. Jay, what do you think about where crude oil is right now?
That we talked about this a little bit in the green room yesterday, Hogue. That range from yesterday, it almost looked like no one was trading it. Where it is right now,
Mm.
we are sitting on the daily, right above that 200 moving average on the daily 65.50. Uh, it's just in balance, right? We do see maybe a little bit of an extension of the range today, already trading about $1.50 in crude oil before these inventories come out. So maybe we do get a more expanded range today in crude. Uh, but it's hard for me to look at this market and expect too much directional movement when we can zoom out and see, a full quarter of a $2.50 range in crude or whatever we had last year. So balance is what I see, Hogue. That doesn't mean that there is an opportunity in this market, especially with inventories today. It might be more interesting to watch than a day like we had yesterday. But we are kind of just stuck here.
All right. Quick look at the 30. So yesterday's range very small. Okay. During rollover, that's kind of to be expected. But when we see a really small range like this, it's just kind of rotational. The market has used up a lot of its ability to facilitate trade in that area. It makes sense that the market is seeking a new area to facilitate trade. Overnight inventory. What do we got here? We got overnight inventory a little bit short. We have a session gap. Wah, wah, wah. Okay, well, maybe not that much of a gap, but we are probably going to be opening below the range from yesterday. All right. Look at where the market has just found some buyers. I mean, at 65 65.70 is weekly kickoff low. There was a naked point of control there at 65.73, and we're starting to see a little bit of potential reversal here. I don't see a really good reversal pattern on the 30-minute chart. However, let's take a look on this 5. Yeah, so a little bit of buyers coming in below this level. Not a real strong reversal pattern that I'm seeing here, but it, I think the opening range trade today is worthwhile because we are out of balance from a very balanced day. Market is seeking new levels to facilitate trade. I don't know if the longer time frame is going to let that happen without some sort of news coming in. Love the fact that we've just had a decent test of the confluence we were just talking about. This 65.40 to 65.70 range here. Just looked into it, seeing some rejection. Jay, what do you think?
The overnight inventory, like you said, a little bit short here, Hogue. Maybe we're getting extended for what crude has been doing. We're seeing, overnight, one of the bigger ranges that we've seen, and we're coming down into an area on a higher time frame, that 200 daily moving average, that may be a support. I don't know that and we have crude opening in 40 seconds here. I don't know that I hate longs back up to this VWAP for the session. We can see, like you said, some buyers coming in here, higher time frame support area. Are we going to get a directional move today in crude with the inventories coming out? I think, yeah, I don't hate longs here. Kind of back up
Right.
into that range. This is VWAP from the overnight. And we got 20 seconds, 15 seconds here until crude opens. That being said, full disclosure to anyone listening, my reads in crude have been off. I will say that. I've been reading the NASDAQ, the equities, and gold really well, but crude oil is throwing me for a loop. So take that information for what you will. We have crude open now. Take a look at what we got here.
Here we go. Ding, ding, ding. So the majority of volume and open interest will be rolled into the September contract after today. I expect Top Step X to roll to September or tomorrow. Oh, look at that move. We're getting some downside selling pressure. Almost a 20-tick opening range. Couldn't quite hit
21
that
in
overnight
CL.
high yet. What's your low in the CL? I'm looking at the micro still, Hogue.
Low in the CL, 65.69.
Okay, perfect. Name in
High.
micro.
65.90 is the high. Negative delta coming in here. Negative delta on the lows here. A little bit of potential accumulation going on. Negative delta holding the low, at least for now. Delta's minus almost 300 right now. All the volumes at the bottom of the opening range here, and it is all negative delta.
Oh, one more thing before I forget. I didn't mention earlier. We have another number coming out at 8:15 a.m. Central Time. Industrial production capacity utilization will be out in about 15 minutes. I apologize for not mentioning it. Also got a couple talking Feds coming up. Beth Hammock speaking at 8:15. Michael Barr speaking at 9. And John Williams speaking later tonight. Get the beige book at 1 o'clock Central Time. And again, I mentioned the EIA patrolling at 9:30 Central. We'll round out our eco calendar for So, Hogue, I put our stop to enter a couple of ticks above the micro high. You said the high in the minis was 90. Is that correct? High in the micros is 80. High in the micros is 87.
Really?
So I put our stop to enter up at 91, just in case.
Okay.
In case they try to shake us out with a little micro shim sham. Keep an eye on this. Nothing yet.
Nothing yet.
We're going to turn into a 3-minute opening range in just a couple of seconds.
I'm curious on how crude responds to this opening range on inventory days. Does it usually leave this range on inventory days?
It does. We got in on the short side last week.
Okay.
Like I mentioned a minute, I was talking about crude oil inventories just a few minutes ago. I thought we had trade of the month on. I saw those
Yeah.
API estimates for inventories, much bigger than expected. Oh, we just got into trade. We are long 65.91. Long 5 micro crude 65.91. Take total of $150 worth of risk on this trade.
This is long 65.91.
All right.
I don't hate this because, again, last week we got that spike in inventories. You'd expect crude oil to pull back. More supply, higher supply, prices should come down. But it was the complete opposite yesterday. So maybe we'll be on the right side of this trade today. On the long side with a huge spike in inventories again.
All right.
1-to-1 will put you somewhere around VWAP by the time we get back up there. 66. What is it at? 66.20 right now. 66.25. I like this trade.
Right. Even overnight VWAP.
Yeah. I don't hate it.
I don't hate it. We're not taking a whole lot of risk out on it.
Don't be hating
that
on our
Hogue?
trades. Don't be hating on our trades.
Hating on our trades. Speaking of it, don't forget to click like, hit subscribe. We've got almost 2,000 traders here watching the opening call, putting on this crude oil opening range breakout trade. Like, subscribe, show us a little love. Hey, one last piece of news to talk about. Yesterday, I mentioned how Powell was in the hot seat. Trump was busting his chops over some renovations he was making at the Fed building. I thought maybe he was putting in a new indoor outhouse in his office or something. But it turns out, I think we've got an image for this too. He's putting on a $2.5 million wing to the Fed building. $2.5 billion.
Jeez.
Expensive wing.
I have an image of it.
Called
I'll give the guys in the back a second. A little pic of it. Construction site.
It's the Powell wing.
Yeah, the Powell wing. Trump's quotes were unbelievable too, by the way. I felt compelled to share this after I read the quotes. I think this is a direct quote from the president. I think he's terrible, but the one thing I didn't see coming is that he was a guy that needed a palace to live in. He went on to say that talking to Powell was like talking to a chair because of his lack of personality.
Oh, jeez.
If you leave the politics out of it, you have to admit that our president is a pretty funny person, right? Regardless of what side you sit on, it's how can you not laugh?
Definitely says what's on his mind.
Right? Yeah.
I didn't think the guy needed a palace to live in. $2.5 billion renovation on the Fed. I thought we had a pick for that. Oh, I'll get it to you guys later.
2.5.
Got a couple ticks in this crude trade.
It's looking good.
We still have the NASDAQ to take a look at.
Let's talk about it, Hogue.
Oh, on the daily, look at that excess high. We get the charts up here. Gold crude trade's looking good. Onto the NASDAQ. Look at that excess high yesterday. Auctions die in excess, and that upside auction died yesterday for sure, but it didn't change the market state really. We're still range bound. We're still
the tape bomb we just had go off in crude oil.
Oh,
spiked 66.16 new high, came right back off again.
Wow. What was that? Headline checks. Let's see if we got anything come up.
Looking
Mhm.
for it. Apologies for the
Not seeing
interruption,
anything.
guys.
More
Oh, not at
buyers than
all.
sellers. That was the news.
Was the news.
Nope.
All right.
Not seeing any headlines.
I'll let you know. I'll let you know what else happens if anything happens. Great. Back to the
All
Nasdaq.
right. All right. Thanks, KD. All right. So yesterday on that pullback off those highs, we lost about 4,000 in open interest. So that was, in large part a long liquidation or a profit taking event that happened in the Nasdaq yesterday. Nasdaq pushed a lot higher above the previous weekly kickoff level and last week's high. Of course, the Nasdaq is always going to outdo things, but now we're back into balance, and we've got a really interesting opportunity, I think, in the equities today. Jay, what do you think about this daily? What do you think about that excess on that high?
So, Hogue, you'd asked a question before about the S&P making the high on that data, on the CPI data that came
Mm-hmm.
out yesterday, and did it matter
Mm-hmm.
that that was an overnight high? What it reminded me of was last year, around the same
Order
time, about a
filled.
year ago, we had,
Mm-hmm.
I'm pretty sure it was a CPI print on July 11th, where the high of that was the all-time high at the time. The high of that
Uh-huh.
print was made in the overnight session, and we can see the sell-off in July afterwards.
Uh-huh.
This chart, I mean, the daily candle, we don't see the same rejection here, right? We don't have that. This is, and again, this is the July 11th, 2024 daily candle. We don't see that same
Mhm.
wick, but same idea here. We're making the high on that data and then selling off from there. Uh, Looks similar, right? So now the question is, can we take out that high, or do we find buyers? Um, that's a big rejection, right? That's a pretty big rejection. The Nasdaq tried to hold up yesterday while everything else
Mhm.
was selling off, and it
Mhm.
couldn't. Towards the end of the day, right? We ended on the lows, pretty much. So this daily range, interesting. I will be looking at when we go to a shorter time frame, looking at that CPI range to see whether or not the market can accept back inside of that, or do we reject. I think we had probably some more news come out later on in the day yesterday that the CPI
Uh-huh.
number looked great, and we still have these tariffs looming and things like that. Uh, the market's making all-time highs, but it's not doing it convincingly.
Mhm. Yeah, it's kind of trying to creep up on it, right?
Yep.
Well, I mean,
Yep.
as long as it keeps going, what are we going to do? Maybe we
Right.
see those buyers come back in and see some continuation today. Maybe. Who knows? Let's take a look at the 30. Oops. Take a look at the 30. And so the all-time high in the NASDAQ did occur in the regular trading hour session. Opening range was the dead ass high yesterday. Opening with overnight inventory to the long side at an all-time high. We ended up coming back, closing the gap, closing the value area special situation play. Eventually, actually last night, finally did it. And now we're seeing buyers coming back in. One of the important inflection levels that I'm going to be probably focusing on a little bit this morning is the fact that we did have that late spike to the downside. A late spike to the downside is in that last 30 minutes. The range is extended and closes outside of the previous session's range. So we did that yesterday. The base of that late spike is 23,077.75. Are we going to open above it? It was looking like we were going to in the S&Ps. Are we going to in the NASDAQ? Maybe. What it means is if you open inside the late spike to the downside, it's a probability of acceptance of lower pricing. That's all that means. You're probably going to see value outright lower or overlapping to lower. If we open the session below the late spike altogether, below 23,050, that is a higher probability, of course, of value being accepted at lower pricing. Doesn't mean that you can just close your eyes and sell, although it gives you an idea of the probability of the movement of value by the end of this session. Anything can happen, of course, and just make sure that you're that you are always, protecting yourself. That's what makes me think that today is going to be an interesting, challenging, and potentially really profitable trading day in the equities. Jay, what do you think about that?
I like a really profitable day in the equities, Hogue.
Yeah.
Let's speak it into existence. But what we're looking at
Mhm.
here on the 30-minute, we have the 200 moving average, which is this white line on my chart, starting to flatten out. We can see balanced market. We trade below it. We trade above it. Again, a market that is making all-time highs, doing it reluctantly. What I am looking at is the 30-minute range from CPI yesterday. 23,150 is the low extreme of that range. And then I have a VWAP attached to that, which is right at 23,115. That became a resistance at some point yesterday. So, right now, overnight inventory is long. How do they respond when we get back to these averages? We know that there are, longer time frame market participants that may be holding on to positions. We talked about them in the S&P Hogue, attracting new shorts. Can you remind me, Hogue, what you said about the open interest for the Nasdaq?
The approximate was a loss of 4,000. So
Loss of
more
4,000.
long
Okay,
liquidation yesterday.
got you. Okay. So yeah, I'm looking at this VWAP here, 23,115 from that CPI print yesterday. If we push up there, do we attract buyers? Can we use that as a support and then push that all-time high? Again, it's doing it reluctantly. A couple of ranges. We had the Nvidia candle range as well, where Nvidia is okay to sell in China again. We're trading right at 50% of that, which is right around that 77 area you were talking about, Hogue. So, interesting opportunity. I think again, big enough ranges to trade in the Nasdaq. I actually took a long yesterday while this market was selling off and was able to have a pretty decent day. So there's for sure opportunity here.
Hmm.
The market may be balancing on a higher time frame, but if we're day trading here, so there's a ton of opportunity. I think it's just being patient.
Yeah, Jay, would you say, I mean, as long as we remain in this kind of balance area, pretty much anything you're going to do is see money, take money?
For the most part, unless we see something change, right? A headline comes out, I see some aggressive buying coming in. For me, Hogue, it's more of a see money, take money trade to the short side, just because higher time frame where we are in that uptrend.
Yeah.
If I get in a long, I mean, if I could have gotten along during the London session, it seems like our friends in London always have the most fun. They get the best prices. But that wouldn't be a see money, take money trade because I'm looking for this rotation all the way back up to the upper extreme of this range. Right now,
Hmm.
we're kind of in the middle. So we'll have to see what we get for the session coming up here for fast markets. But um, I think I'm more see money, take money to the short side and let it work to the long side.
Yeah, that makes sense. I mean, we all know that the longer term trend in the equities is to the is bottom left to top right. So
Yep.
uh, awesome. Well, thank you, Jay. Thank you, Jay.
Thank you, Hogue.
All right. Well, look, we looks like we got a little problem here in the gold trade here or the crude trade here, huh, Jay? JD.
Yeah, it came within one tick of our stop there. First, we saw a spike. There was a tape bomb on the way up, and now we are breaking. Uh, just missed our stop, seriously, by a tick. Still in this trade, but we are taking some heat on it right now. No doubt about it.
Well, that's
Again,
well
only
placed
about
stop.
$150. Oh, yeah. UAA 65.61. Low print on that move 65.62. One single tick.
Yeah. I love it when a plan comes together, and sometimes that's just what it does. It comes down, takes out all the stops that it knows are on the other side of that opening range. That's why you've got to move your stop a little bit further away than just the bottom of the opening range, and that might have been just enough to keep us in this trade to see if we can continue this move to the potential upside. I don't hate it still. I mean, we're
Mm-hmm.
we're we're right in that area of confluence that we were looking for opportunities when we were talking about, when we were looking at the crude chart. So mm, almost got us up to that VWAP 6622 on the 30-minute chart. Almost.
Mm-hmm.
I don't
622
hate
is
it still.
also that is yesterday's low. 66.22 yesterday's low on your top side daily levels indicator.
Mm.
We're almost back to our entry price, guys. Talk about making you sweat. I thought we were toast for sure.
Yeah,
No
game week
toast.
6. JD, I've had a couple of those in the past 2 days where either you trail your stop up or your initial stop, the market comes to within a point or two of it. So nothing makes you feel more alive than almost getting stopped out of a trade, and then the market's popping up again. But that's where you add, right? Bring that average down a little bit. But yeah, this
Good
trade
point.
this trade
Yeah.
looks good. This trade looks good.
That industrial production capacity utilization number did come out a couple of minutes ago, 8:15 a.m. Central Time. Prior came in at minus 0.2%. Prior revised 0.0%. Consensus month over month was for positive 0.1%. Came in actual 0.3%. That was industrial production. Capacity utilization rate 77.4% prior. Prior revised 77.5%, by 0.1%. Consensus for month over month was 77.4%, came in actual 77.6%. Little uptick in capacity utilization rate. That number.
Charles
Yeah.
Chapman said toast, avocado toast. We're not toast yet.
Avocado toast. I'm just the plain toast guy.
Me,
Uh,
avocado
Actually,
toast is
Charles
just toast
Chapman.
with avocado on it.
I think it's
Pretty
good luck
much.
if we show the toast. Is it good luck if we show the toast graphic? That mean we're on the right side?
I think so.
See if we can get that up. Sorry to put me on the spot back there.
I want to answer a question from Tribe in the chat. It says, when you look at volume, are you considering it in relation to recent averages, or are you looking for a specific threshold? Hope my question makes sense. It's a great question. The answer is it depends. There we go.
There it is. Toast. Now we're on the right side of the trade.
But for Tribe, that it depends, right? I'm usually going to look at volume relative to the time frame I'm trading, right? So I'm not going to compare New York trading hour session to overnight because the volume's always going to be different. I think when you look at the same markets day after day, you kind of get a general average of where volume should be.
Order filled.
But yeah, it kind of depends on a higher time frame. If I'm looking at a daily, you'll compare it to what happened over the last month or so in the market. If we're looking at crude oil right here, crude is well under the average, so it's hard to compare it to what happened, a month ago. Hopefully that makes sense. I might have just confused you a little bit more, but
We were right.
No,
Well,
it makes
not right
sense. I mean,
because I didn't get there 100.
Volume is like everything else; it's subjective.
correct.
And I do like the fact that you keep that moving average on the volume there, so you can get a
So
kind of a
for my,
gauge as to what is strong volume, what is weak volume.
So
That's
I
all.
have taken it when I had the opportunity.
That's all important stuff. I mean, volume
Let me
drives
see if
price.
it does. I'm gonna see if I can find a link to a volume class that I did. I'll put that in the Discord chat if I can find it. I'll put it in the Coach J Discord chat if I can find it. We'll explain it a lot more there.
Awesome. Well, folks, you've been with us here for quite a while. There's a lot of folks watching. Make sure that you do your trading checklist. Make sure you prepare yourself for the day. If you don't do your homework, you don't get to play at recess. Here's the Top Step trading checklist. If you don't use this, set something up for yourself, some sort of an outline, something that you can depend on every day to remind yourself to do all the things that you need to do to prepare for the trading day. Don't forget to always be checking your physical, mental, and emotional and spiritual side as well. If you're sick, if you're not feeling well, if you didn't sleep well, these are all things that are going to affect your decision-making process. Do your morning checklist, get your research, trade entry checklist. What is going to get you into a trade and why? Put together your hypotheses, get your notes, and don't forget, of course, Make sure that you journal every day. We also have the emotional trading journal template here, something that was given to me a number of years ago by a trading psychologist I was working for that I didn't believe in for a couple of weeks, and he was not going to work with me anymore until I started doing it. And when I started doing it, I started seeing the power inside it. You're going to find patterns in your decision making process, especially how that decision making process is changed by emotional, mental, and physical state change inside of you. We've got great tools for you to continue to grow and get better as a trader here, and we certainly love to see when people are succeeding. Oh, here they're coming for us. Maybe here in crude oil, guys.
We are right at weekly kickoff low, 65.70 in crude oil right now. We still got a little room to breathe on this, but yeah, we're taking some heat. See if weekly kickoff low level will hold Hogue.
Yeah, we
overnight
needed
for a little
to.
bit.
Yeah. Well, I mean, I knew this was going to be an important area, but you never know direction, right? I figured this was going to be an area that there might be a really good execution. We're still in it, and we're not dead yet. But if it doesn't hold, I would think that the longer time frame traders would like this level to hold. I don't think that they're looking for any directional activity. This is probably the second biggest day of rollover. Yes, of course, we will be trading the September contract tomorrow. This morning, and I looked at the volumes. The volume in the August contract was a little bit higher than the September, still is, but by tomorrow, that September will have the higher volume. So you'll need to adjust all your levels and things like that. We will adjust weekly kickoff levels for you for, of course, the September contract, because we are currently trading right at 65.70 weekly kickoff low. Let's see if we can hold it here. If not, well, shaving Nick.
Just a paper cut. Real quick, we got to get through the schedule for the day. Coming up, Fast Markets, we got our guys Doom and Jerome in the back. They're going to be joined by Jack and Hogue. We might get a visit from MP later on, too. Possibility. Hogue's coming back at 11 o'clock for the morning recap. Andre, Travis, E, and Dolby for Rising Stars at 11:15. I'm going to be here for a lunchbox trading with Coach Hoop and Coach Vince. Gabe and Bonnie will be here to stump you for Top Quiz at 1 o'clock Central Time. Then Gabe's going to stick around for another Rising Star, Charles P. He and Dolby are going to be picking his brain, going over some trades. And then we're closing out the day in Power Hour with Andre, Coach Dakota, and the Salt Lake City Sniper, Mandy F. Is your schedule for the day. Plenty of entertainment coming your way, folks.
Awesome stuff.
Awesome.
Thank you, JD. Hogue, I think you're going to throw us to Fast Markets in just a little bit. This is going to be my last time on the air during the daytime show for a couple of days. I'm going to take some time off. I still will be here for At the Buzzer and Slow Markets tonight. But this has been fun. It's been fun, guys. Trade well. And like we've been saying, if you haven't done so already, hit that thumbs up button, like and subscribe. Tell your friends and family too as well. And trade well today. Trade well today, everyone.
Jay, before you step away, any closing comments you want to tell everybody? And
any closing comments? Nope. Trade well. Trade well. Manage your risk.
Well.
All
right.
For tomorrow.
Nope. Awesome, Jay. Well, all right. Again, thanks for joining everybody for the opening call. Hopefully, you got some good ideas and context and a little bit more trading knowledge. This is a wonderful opportunity that we're all given in these markets every day. Make sure, of course, that you stay humble. Once I start to feel like I'm God's gift to trading, I know that there's danger at the door. Grateful, creative, stay centered, and of course, pray every day for peace. We are going to be heading into Fast Markets right now. Again, thanks for joining us. And Fast Markets begins in 5, 4, 3, 2, 1. Let's go. Order filled.
Turn the machine back on. Turn the machine back on. Turn the machine back on.
Sure. Let's get your 16 trillion of Mag 7 market cap in the gates. What's up, Dre? What's up, Jack? Welcome to Top Step TV. This is Fast Markets. Who we got in the house? Oh, I like this pairing today. We got Jerome lower left-hand corner. We got Doom in the lower right-hand corner. Jack in front of that beautiful, beautiful mountain. Let's go to Doom. Welcome to Fast Markets, my friend. How's it going? Thoughts coming into this trade on this Wednesday? Morning, Doom.
Morning, gentlemen. I'm an early bear. Got kicked in the mouth. I don't like this.
What happened?
Honestly, I don't like this range. Too volatile.
What happened?
I don't like this range. We've been going sideways for long enough. Is it 1, 2, 3, 4 a whole week? And I haven't really liked how ES and NQ disconnect during the day. Oh, be overly bullish. They don't switch hats. Back, forth, surprise, surprise, surprise. Scalps. Scalps.
All right. Love it. Love the take, Doom. Coming in hot. Jerome, my friend, good to see you again. Thoughts coming in. You've been trading quite well lately. We make new all-time highs.
Good morning.
NASDAQ and the ES.
Nice
How are
to
we
see
trading?
everybody? How you doing?
Go ahead, Jerome. What are your thoughts?
Sorry. Sharing a bit of thoughts as Doom. Yesterday was quite bearish, actually. We couldn't break above the 30-second opening range. We stayed below. And the comments of President Trump at the end of the session made it even more dumping. Actually, we are, after PPI, we are at the level where we started to dump yesterday evening for me, yesterday afternoon for you guys. So we'll see how we open here. I won't be surprised if they press the sell button heavily and they try to take this down to keep in profits the shorts from yesterday they have open. Otherwise, what would happen if we are to pump is that all the stops from yesterday are gonna pop and we'll have a huge squeeze. So the open is about to go. We'll see.
Yes.
Here we are.
Right. Here we go. All right.
Ding, ding, ding.
We are now open in New York. Let's take a look at some of these prices here in the NASDAQ. 23,071 last trade there. ES just a couple points underneath 6,300 last trade. 62.98. Let's go see if they want to tap on the highs there. 6,300 half. Take a look at crude. Crude last trade $65.63. Gold trading 33.40. Jack, at PPI this morning,
Yes, sir.
earlier, it came in less than
PPI
expected.
Came out
All under
cool,
control.
and that gave the go-ahead for bond yields to come in a little bit. 10-year at 4.463. We're battling for 6,300 right now in the ES, taking it out, new highs. Looking at my charts, though, you can see we've just been in this Dakota would say beautiful range for all of July, going from 62.60 to 63.33 or something like that. What was the high we got to here?
62.35. 35?
Yeah, exactly. But right now, as you can see, after the PPI number at 6,300, we're right in the middle of this range for the month. So I do want to see things shake out here. Still bullish, but the people overnight have been having all the fun. Look at this.
Look at this.
Look at this. Look at
I'm
this.
short off 57 and 3 ticks.
Short one
Order
ES,
filled.
but couldn't catch.
57. Doom short from 57.75. Jerome, did you get short?
Yeah, short ES, but looking to add here. Gonna add one at 96 if I can get it.
All right. Doom short from 23,057.75. A little song coming in here,
Am I bounced
23.
here?